We've got Antoine Flamarion. He is the co-founder of TKO Capital, joining us live this morning from our SGX studio. So before we get to the private credit angle, Antoine, I do want to get this big picture question out to you. How are the LPs feeling right now? And a lot of people are watching what's going on in the bond market situation. The yields have been staying so low for so long. But now it feels like the direction is changing, and that could actually hurt assets like private equity.
Good morning, both of you. Thank you for having me. Yeah, I mean, you're right. The world is changing fast, geopolitical, but macro, and everything is driven by interest rate. And as we all noticed, long-term interest rate keep increasing because of deficit, and tariff will probably create inflation as well. So that's created a lot of turbulence in the market. And in private market, it's going to be probably very bumpy because a lot of people need liquidity. And when interest rates are growing, all the credit, all the real estate value are going down. So we should expect probably a very bumpy period. But then it leads to a lot of opportunities for the active player. So you've got the both sides, if I may say.
Yeah, and of course the conversation around a private credit market is that traditional lenders, banks are retreating. So private credit providers are going in there. Is there a spread? Is there a difference between the U.S. or some of the Western markets versus here in Asia in terms of the demand and the companies that you're looking at?
Yeah, as you flagged before, U.S. has been really ahead of the curve when it comes to, financial industry and especially private credit. Then it started in Europe in 2009 on the back of the financial crisis, and it's just starting a little bit in Asia, but banks are probably very strong in Asia. So what we can say is that U.S. is more efficient. You have probably more risk-adjusted good opportunities in Europe and now in Asia than in the U.S. And private credit will continue to grow because you have to finance all the new territories, all the new sectors. Who is financing AI? Who is financing data center? Who is financing defense? Who is financing ESG and so on, energy transition? So I think private credit will continue to grow. There is no doubt. But it's been a little bit crazy the last few years. So probably we'll have to expect for the people who have been less cautious some defaults. But it will continue to grow.
Mandy jumping in on the conversation. Mandy jumping in on the conversation, Antoine. Let me just pick up on one thing you said there, and that is that increasingly private capital is going to be deployed in areas such as defence. We've been, of course, covering the Shangri-La dialogue that's underway in Singapore right at this very moment, where defence chiefs and military military people are hobnobbing and talking about what the world is going to look like. It's geopolitically not great right now, and areas such as Europe are naturally really ramping up their defence capabilities. What kind of trickle-down effect do you see, therefore, to your department?
Yeah, so I think the world changing super fast in the last few years, and obviously we've got Ukraine, we've got Middle East, 10 days ago India and Pakistan. So we need some very strong leadership, and I think a lot of the strong leaders are now in Singapore for the summit. And I think we need to expect probably more money and massive money going to the defense sector. And at the end of the day, defense is helping democracy to survive and to be there. So I think Europe, for instance, European Commission just announced that they will put 150 billion in the defense sector. Europe, as you know, was highly dependent on the US. And so everybody in Europe consider that, with the war next door, very important to have your own capacity. So we'll see a lot of public money and a lot of private money coming into the defense sector in the coming months and year. Is it good or is it bad? It has to be like that because, for quite some years, everybody has been relying on the US, and the US have been more volatile. So as a consequence, a lot of money is going there.
But the deteriorating fiscal situation of certain countries, and we've been talking about rising JGB yields with regards to Japan over the fiscal concerns. How much is that, because public funding might not be able to rise to the occasion in some of these sectors, how much is that driving demand for more private capital?
You're right on spot. I mean, deficits are huge all around the globe. The tariff creates inflation, and long-term interest rates are growing fast, with also the GDP in Japan 2 days ago. So I think we need private money to go in this sector, and private money all around the world is, in different companies. So in Europe, you have insurance company. In Australia, you have pension fund. In Asia and Middle East, you have sovereign wealth fund. And I think all this money has to be directed into the real economy, and more specifically, as we discussed that, in the defense sector. And I think we are at the beginning of that. And I think it's really accelerating. Frankly, in Europe, it's really the beginning. In Asia as well. US has been, again, ahead of the curve, but I think we see that's happening, and there is a lot of people, including private investors, who are willing to invest in the defense sector. So it's just the beginning. At TKO, we have 2 billion out of 50 investing in the defense sector, but we see some growing interest from all around the globe, and the trend will continue because, as you said, you cannot rely on public money.
And you've made some early moves, Antoine, since 2013 in energy transition-related investments. What are some of the new portfolio companies that you would look at this point in time to push this theme even further down the road? Because, sure, we're familiar with renewables and EV companies, but what are some of the new ideas that you're looking into?
Yeah, and we build TKO by innovating. We are entrepreneurs, so we build a company innovating, and we launched energy transition 10 years ago, and we started investing in companies, not in assets. So energy storage, low carbon mobility, building material efficiency, and so on and so on. And we build a business like that. Total Energy joined us to help us doing that. And now we have like 20 companies around the world. And for instance, right now we are investing in engineering, because all this energy transition, when you want to build data center, for instance, you need them because it's consuming a lot of energy. You need them to be very efficient from an energy point of view. So we invest in 2 engineering company, very large companies specialized into that. So it's not so much the asset, it's more the company. We are not doing early stage bets, too risky in our view, but we try to find sub-segments which are going to be critical for energy transition. And energy transition, by the way, is not disappearing. It's even accelerating. But once again, fairly similar to defense. You need private money to go there.
Thank you so much for joining us today. It's been a pleasure. Antoine Flamarion, the co-founder of TKO Capital.